The Capital Market Master Plan has recommended the introduction of new capital market products to facilitate deepening and diversification of the products that can be traded in Kenya's capital markets. The new products include real estate investment trusts, REITs, derivatives, exchange-traded funds, global depository receipts, and global depository notes.
There was a clear recognition within the master plan that we need to diversify the available products to allow for a better alignment of the solutions the capital markets can provide to funding the wider economy.
One of the recently adopted products in the Kenyan capital markets are the real estate investment trusts, REITs. Real estate investment trusts allow small or large investors to own a share in a real estate property by collectively pooling their funds together as in a unit trust scheme. They provide ongoing income distribution along with the potential for long-term capital gains through unit price appreciation. The introduction of REITs is in line with the country's economic blueprint Vision 2030. The main objective is to provide funding for residential and commercial real estate projects, thereby enhancing the development of the country's real estate sector. REITs in Kenya are exempted from corporate tax, capital gains tax, and stamp duty on purchase, sale, or transfer of properties. A property developer can now raise funds for real estate ventures through the capital markets with reduced development costs.
The Capital Markets Authority was quite conscious that a development REIT would involve investors carrying part of the construction risk involved in such a product, and therefore limited the investment classes who could participate in development REITs to institutional investors and sophisticated investors above a minimum investment threshold of 5 million shillings, just to ensure that those participating would have sufficient resources to be able to seek the necessary independent advice and counsel to help them make an informed decision when going into a development.
The authority also approved a grant of a license for the Nairobi Securities Exchange to establish a derivatives exchange. A derivative is a contract between two parties whose value is determined by the value of one or more underlying assets. It is based on different types of assets such as commodities, equities, bonds, interest rates, exchange rates, or indices. By redistributing the risks of a business to more people, they encourage entrepreneurship as the amount of risk faced by a single investor is minimized.
There are around 4 basic things that differentiate a derivative from other contracts that you have in the market. You realize that in the spot market, when you are trading, you have to have your side of obligation in terms of commitment. You have the finances to meet whatever you are buying or selling. But in the derivatives market, at the time you are entering a contract, you either pay something very small or nothing compared to the size of a contract. The second aspect of a derivative is that the value of the derivative instrument that will be exchanged in future or transacted in the future is driven by the underlying activity or instrument in the spot market. The third thing is that maturity of the derivative instrument is done at some time in future. And fourthly is that usually derivative instruments will have to involve markets who have participants in the market who have a little bit more knowledge about the securities and FX market.
We had commenced our program around the derivatives about 2 years ago, and we're now at a very advanced stage of bringing to bear this market. We have progressed in terms of infrastructure development, in terms of capacity building, in terms of this product specification, public education, and all this preparatory work. A lot of intensive engagement with our regulators, stakeholders has been going through this, and we've successfully made good progress in this area.
Exchange-traded funds, ETFs, have also been introduced. ETFs are securities that track an index, commodity, bonds, or basket of assets. They operate like an index fund. ETFs replicate the performance of the index they are tracking. The Capital Markets Authority is also in the process of facilitating the issuance of Global Depository Receipts (GDRs) and Global Depository Notes (GDNs). These are negotiable certificates issued by a depository institution. They represent ownership interest in the ordinary share of a stock of a company and bonds respectively. They are marketed outside the company's home country to increase visibility in the world market and access a greater amount of investment capital in other countries. They enable companies from developed countries to invest in companies from emerging economies.
Global Depository Receipts or GDRs are one of the products that the Capital Markets Master Plan clearly stipulates that they should be launched in our market. And the way it works is that, just like we've been talking about derivatives, it's actually technically a derivative. Only that in this case, we are talking about issuance of a product outside the country on the basis of stocks or securities existing in the home country.
One of the goals in the Vision 2030 economic blueprint is facilitation of infrastructure financing, where the capital markets are expected to play a pivotal role. The Capital Markets Authority remains true to its commitment of promoting development of the Kenyan capital market through innovation and continuous improvement to ensure Nairobi achieves the status of an international financial hub as envisioned in the Capital Market Master Plan, a Vision 2030 flagship project.
Even as an authority and as a sector and as an industry, we'll continue to urge more issuers to come to the market to issue both equity as well as debt. There was a clear recognition within the master plan that we need to diversify the available products to allow for a better alignment of the solutions the capital markets can provide to funding the wider economy.
The Capital Markets Authority has set up a whistleblower portal on its website to give whistleblowers an opportunity to report malpractices in the capital markets. Through the portal, you can indicate the nature of the malpractice, the place, date and time of its occurrence, information on key suspects, and details of persons who can verify or provide further information. Through the Whistleblower Portal, you can share anonymous but verifiable evidence to complement the authority's investigation and enforcement efforts. As a whistleblower, you are at liberty to share your contact details or remain anonymous. We assure you that the Whistleblower Portal is safe and anonymous. To remain silent is to be complacent with the malpractices you see, so do not hesitate to report to the authority. If you see something wrong, anonymously and safely report. To contact us, write to us on corporate@cma.or.ke. Visit our website www.cma.or.ke or come to our offices at the Embankment Plaza, 3rd floor, Longonot Road, Nairobi. You can call us on 254-2022-64900. You can also contact us on Twitter @CMA Kenya and on Facebook as CMA Kenya.